Victor, good afternoon. I saw your tweets yesterday that you have some interesting something for us. So we have this special Sunday quick meeting. So tell us what interesting stuff have you seen?
But first, from you, what did you see anything?
All I saw is that cryptocurrencies are crashing today. Other
Mhm.
than that, there is not really much that I have noticed.
Do you think that the fact that COVID occurrences are going down by 20% a week, and that hospitalizations are down by 25% a week, and yet the the openings of school and the lockdowns are not not being reduced? Do you find that significant?
I am not sure how it affects the markets, but it certainly affects people's mood.
It certainly affects the chances of the stimulus bill. If they were to announce that they had whipped the virus and that everything that's
Right.
happening in
And there
the
is no
future is,
need for the stimulus bill anymore.
and then all the earmarks and all the pork, all the handouts to disadvantaged groups, all the vote buying would be reduced. Okay, here's what I have. I was reading a book called Racket Work by Jack Barnaby, who was my mentor, gave me my first good meal, introduced me to Gilbert and Sullivan, used to take me to all southern the southern colleges. We go on a southern trip every spring. I traveled with him for 4 years. He was a great mentor to me. I owe a lot to him. He was a great man. But I never realized I always looked to him as a guide for squash. He was once one of the greatest squash players, and he had the greatest squash teams. When I was there, I think for 10 years we hadn't lost a match. We beat Yale about 15 times in a row. Anyway, he's talking about something called simplicity, and I think it applies very much. He was writing about simplicity in tennis, but I think it applies even more so to simplicity in trading. Nothing's more important than simplicity in tennis because of the great effort factor in the game tempo. Things happen fast, not slowly, and he who has any unnecessary complication in his game often finds himself trying to make two moves in a split second that allows for only one. A long, smooth backswing with an elaborate up, back, down, and forward swing looks lovely in a movie. It reads beautifully in a book and sounds theoretically proposing, but nothing is any good unless it can be easily completed within the allotted time. Simplicity in stroke protection is the only hope in our search for consistency. How can we hope to get something right again and again if it is complex and difficult? Clearly must be as easy as walking if we hope for this constant repetition without a significant percentage of failures. So we should stop thinking about the perfect stroke, employing a considerable backswing, working up to great velocity, maximum power. This is good only for the fellow sitting at the desk writing a book. Our job is a quick, simple preparation and an unadorned follow-through. Now, there's a professor at Chicago. He was one of my teachers, great mentor. He was the person who first alerted me that all of the biased literature, all of the cognitive bias and the Kahneman's thing, he says they were referred to as the promiscuous hypotheses, because you could always find some empirical data that would validate one of their promiscuous hypotheses. And I found that that's true, that all of the cognitive bias literature is totally fallacious, and a lot of it is based upon completely fake answers to questionnaires. It's bad enough that the biases are verified by students paying $2.50 an hour, but also they're undergraduate students, and the answers to all their questions are so ridiculous that they almost are 100% likely to accord with the promiscuous hypothesis. If you ever look at the questions and answers they have a typical thing. If you see a man with a slide rule and ink on his hands walking through the campus, is he more likely to be an English student than an engineering student if you're at MIT? And the answer is he's more likely to be an English student because of the a priori biases. In any case, Zellner wrote a very important, he wrote several books on simplicity. Arnold Zellner, Zellner. And his conclusion was, if you have more than two variables in your prediction, and if you have anything higher than a square, and if you cut off your data more than once, you're likely to have a lower accuracy in prediction than if you go for more complexity, more than two variables and higher than the square. So, okay, I applied all this to the market action on Friday. Now there's a legend, and it's in a lot of the books, that after a down Friday, of course, there's a prediction for a down Monday. And on the last day of the month, when you have a down day, it's likely that the first day will be slightly negative, especially during the wee hours. It will be interesting to see what happens during the wee hours, because the market tested 3,800 twice and refused to, as soon as it got below it, it immediately jumped up 20, 30 points, and it did that twice. So on the theory that you never can make money the same way twice in a row, the next time it drops below 3,800, one wouldn't expect a quick turn back. However, coming up with a simple prediction and based upon the last 58 observations that are most similar to Friday's action, one comes up with a 70% chance of a rise 5 days later, with an expectation of 2%. And looking at it since 2020 and taking the 6 most similar observations. The expectation for 5 days later is 100 S&P points up, 3 to 4%.
That's a nice
So
run.
that's the simple prediction. The prediction based upon the last 58 observations and has a 1 in 100 chance of occurring by randomness. Of course, we know that there's always ever-changing cycles and statistical regularities are different from, you can have something that's very significant, but it can be a very poor prediction. That's my simple prediction for 5 or 6 days from Friday's close. I think most people get it wrong because they stop with one day, and it used to be that the first day of the month was very bullish, but lately it's been about unchanged. But most people have a short-term horizon, and their simplicity stops with one day rather than looking for the regularities to have a time to work. So I think we're going to see some Soji levels pretty soon. By the end of the week, I think he's going to be drinking a lot of coffee, a lot of Kona coffee.
Definitely.
Oh, well, no, not definitely. If it were definitely, then I'd be a rich man. But
The question is
that's
just
the
which level. We're definitely going to be at a soju level. It's
Mm.
I could guarantee that, but which
Well,
level is the question.
I'd say it's 5 to 1 that it's the Soji level that's higher than this rather than lower. It'll be 3850. I wouldn't be surprised if you see 3900 by the end of the week. All right, now that's the kind of guidance that we have on our website. I guess it would be, we worked very hard to try to put our best foot forward on the website, and one is hoping that we achieve some expressions of appreciation and viewership. We haven't received that yet, but we'll go on trying to fight the good fight. Sometimes the best and most useful things are underappreciated.
Yeah.
I noticed that the governor is in trouble today, and also Bitcoin is down. Usually that's been a harbinger of declines in the S&P. I guess that would mean that the 10 million new investors in the stock market, according to JP Morgan, are going to start out with a loss tomorrow. Let's hope that they don't get liquidated by their infrastructure brokers. Okay, Mr. Senate, thank you very much for waking up and sharing our views. I'll give a post to the Zellner book.
Mhm.
It has 20 chapters by experts on simplicity, and I'll give that on our on the Twitter.
All right.
I noticed that I'm losing subscribers on the Twitter. They must mistakenly think that we've gone, that we've taken back our views, that the more woke it is, the better it is for the stock market. And I think the fact that we're having a MAGA day, I think one thing that, not statistical, but the former president is going to speak at 4:30 p.m. at the CPAC, and he's so selfish and so self-oriented that he's probably going to make a disguised pitch as to how he's going to make the comeback. And there are too many people that have a visceral hatred of him. And you put those together with all the government employees who are 98% red, blue, and all the groups that vote 95%, 90% for the blues, and when you add those groups to the people who dislike his personality, dislike his reputation for dishonesty, that will be a reduction in the chances that the Reds will win in 2024. As noted, by far the betting odds favorite is Kamala Harris. Then comes the current president, and then comes the former president. I think that if he comes across it with a strident attack on the Reds that didn't back him and allowed but disguised call for his comeback, I think it could be good for the market. Maybe reverse the decline in Bitcoin, and maybe it won't take 5 days for the stock market to be higher. I think it was very significant that bonds were up almost 2 points on Friday. And of course, all the articles now are saying, talking about the fear of yields going up. Where were they when?
Right.
Where were they on Thursday when we were hitting the 159 level? Now we're almost at 161 again. I think yesterday was a good turnaround day for yields. So it should be an interesting day Monday. Maybe we'll have something to say, and maybe there'll be some viewers who find it interesting. Thank you very much.
Thank you, Victor. And I just put up a chart, speaking of COVID, which was very interesting, that this year pretty much was the lightest flu season on the record. So flu has practically disappeared and has been replaced by COVID. And I wonder if that's because they're not really testing people for flu anymore. They're testing them for COVID. So if you have two viruses, both flu and COVID at the same time, they're not going to find flu, but they're going to find COVID.
You get more money from the government if you have COVID, and it certainly helps the stimulus bills and progressive agenda if you increase the COVID cases versus the flu cases. Have you been vaccinated yet?
No.
Do you intend to get vaccinated?
No.
Okay.
And I it's not that like I'm anti-vaccine, but it is a new vaccine untested. And besides, I have already had COVID. So it kind of defeats the point. And especially now that Dr. Fauci says that even after vaccination, you still need to social distance and wear masks and all that stuff. Why get the vaccine? Nothing changes.
I'm thinking we can attribute the fact that he was one of the, like, the procuring causes of the Republicans losing the presidential election, because he was adamant that we were far, far away and that we needed more social distancing and more masking and more unhappiness, more individuals responding to government, increasing government rather than individual responsibility. Of course, he changed his tune the day after the election. And of course, the way those trials go, 3 weeks before the results of the vaccine were announced, and of course the big pharma was able to sell some stocks the day after the election, and they announced that they had the vaccine the day after. Anyway, we can attribute, I don't think Dr. Cattle has ever said anything that has not been woke. So the more that the Dr. Cattle is in the news, the more he tries to reduce individual responsibility and individual activity and substitute it for government mandates, the better it will be for the market. All right, thank you very much.